Hi everyone, it's Carol Small, the Realtor, and I'm here with my 6-minute real estate bites. And I have a special guest today, and this is Dwayne Johnson. And Dwayne is a mortgage banker with Evolve Bank and Trust. Is that correct?
Exactly.
Okay, and Dwayne is going to give us some really great information about mortgage loans. Dwayne, would you please introduce yourself to everyone and maybe tell them, why you're called a mortgage banker instead of a mortgage officer or whatever, and let us know.
Well, Carol, Dwayne Johnson, I prefer to be called DJ for the most obvious reasons. I work for Evolve Bank and Trust as a mortgage banker. I work directly for a bank, which means I create mortgages, generate mortgages for a bank. I mean, we all are loan officers at the end of the day, but our particular niche is more of a mortgage banker, if you will.
All right, great. Well, thank you for explaining that. So what makes a great lender?
It's kind of simple in a way, but it's kind of hard sometimes, I guess. A banker, first thing is to be able to interview the customer, the borrower, get an idea what they're looking for. So it's like going to the doctor or going to a lawyer and you explain your case to them.
Okay.
Same thing with your mortgage banker or your loan officer. You explain to them what your scenario is and they go from there. They'll ask you questions, kind of get an idea of what's going to fit for you, what's best for you, what you can do, what you can't do, those kinds of things, and kind of narrow down to what type of products, loans, we call loans products. What type of loans will work for that person?
Okay, all right, got it. That makes sense. And what type of credit score should somebody have in order to be approved for a loan these days?
There's not a concrete answer to that. A good number started at 620.
Okay.
But I've seen loans been approved at 550.
Really?
So yeah, there's different circumstances play off different things.
Okay.
So there's ways to fix it. There's ways to work at it. But more so, it just depends on your parameters.
Okay.
Rule of thumb, 600, 620 is a good starting point, but you go from there. And again, it goes back to what product you go into.
Okay, understood. How important is communication in the process of obtaining a mortgage?
It's extremely important. Extremely important. And not just for the customer, everybody in the process.
Okay.
I need to tell my customer what's going on and keep them informed. Because, if you don't hear from your mortgage guy, you're like, what's going on?
Okay.
And then, so I'm keeping contact with that person. I'm keeping contact with my processor.
Okay.
With the underwriters that's involved. So you go back as me, the mortgage guy, I'm going back and forth talking to everyone and make sure I stay in contact with everyone. Whether it's via phone, text, email, somebody need to be in contact. And sometimes we'll keep a journal, a log of what you said, who to talk to. On Tuesday I told them this, blah, blah, blah.
Okay, got it. That makes sense. And, excuse me.
I don't like that, I'm sorry.
It's okay. How important is it to keep in touch with clients?
It's extremely important keeping in touch with clients.
And how do you keep in touch with clients?
I keep in touch with my clients by way of A, direct phone call, because I'm old school. B, a text or email. I usually email you and call a person. Some people prefer to be text, so it depends on what's best for them. I try to have at least 2 sources, though.
Okay. All right. So how about, have you come across people who don't really use email much? Because that happens sometimes with people who are downsizing.
Some people don't use email
retirees.
a lot. Well, so like some of us have emails on our phone.
Yeah.
But everyone doesn't work their phone that way. So that's why, and text is important. I'm old school, so I'd rather be able to call you directly and say, hey, this is what happened.
Okay.
And then follow with email so you have documented what we talked about, what I said.
Okay, understood. So talk to me about mortgage loans for maybe multifamily or investment property.
So mortgages, go back. I do mortgages for residential properties from 1 to 4 units. So a 4-family flat is a good example of that, or a 2-family or a duplex. So that's great for some people starting out because they can buy a duplex, for example, rent out one, live in the other, kind of live freer or cheaper than having to pay a mortgage themselves.
Sure.
So of course in a 4-family flat or 4-family, you got a lot more choices. You got 3 people paying your rent probably,
Right.
and you can live for free basically.
Yep. Yeah. So your company does that as well?
Yes.
They have those loan products. Does it have a certain name or?
There's different products, so there's different loans, different people. So I can't give you a name particularly off the top of my head, but there's called 4 families.
Okay,
And
so just a multifamily
Right.
home,
Well,
but as long as it's from 1 to 4.
Right. But multifamily implies apartments as well.
Okay.
That's why I hesitate to say that.
Okay. Understood. Okay. Got it. So is there a maximum amount of loan that someone can get from you? I know some companies have like called jumbo loans and things like that. I know I live in Chapel Hill, so there are some property. Well, I'm sure there's properties everywhere that are $1 million and over.
Right.
Do you all have some type of products for that or that type of loan? Is it special, something different?
So loans go from anywhere up to 417,000. I think is the exact number for a normal loan, for a conforming loan. Once you go beyond that 417 number, it's non-conforming. That's where your
Non-conforming. Okay.
Your jumbos come into play. Jumbos can go up to whatever amount.
Okay.
Of course, it plays a part on down payment, those kinds of things, as far as your actual loan amount versus your sell amount.
Okay, and I know that I had been working with a couple of people in the UNC cardiology department, and they were asking like about loans for doctors and things like that. Have you ever heard of a special program for something like that?
Off the top of my head, I don't know of a loan for doctors necessarily. There are loans.
Medical professionals.
There are loans for people who have a service, teachers, nurses, those different types of loans. So those kind of people there's a different loan for those. Sometimes they work out better than the regular conventional loan.
Okay.
So it's just case per case.
Gotcha. Okay. Well, everybody, our 6 minutes is actually over, and we went over a little bit. So we're not going to actually have our 3-minute bonus round. Well, yes, we will. So what I'll do is anybody who needs to jump off, that's fine. We're going to have a 3-minute bonus round with Dwayne to answer a few more questions. And thank you, Dwayne. For anybody who needs to get off, Dwayne is going to give you his contact information.
So you can reach me, the best way to reach me directly is my cell phone number. Wow. 919-720-3479. You can email me at dwayne.johnson@getevolve.com. That's with a D. Those are the best ways to reach me.
Awesome.
Cell phone, email.
Or call Carol Small. And my contact information can be found at www.callcarolsmall.com. Dwayne, is there any other, for our 3-minute bonus round, is there any really helpful information? It seems like people get a little nervous when it comes time to get a loan. What can put them at ease and make them feel a little bit more comfortable?
I think it's important to work with someone that you're comfortable with, so that you feel more comfortable. And then when they tell you that they need this, that, and the other, and they explain why they need that, you feel more comfortable in releasing information to them. I think it's important to be upfront and honest with your lender up front, so that way it makes that process easier also.
Do people tend to not be so honest?
I think people don't know what to respond by what answer they may give. So they give you a certain answer, they don't know how you're going to take it. Me, either I can use the information or I can't use it. If I don't need it, I forget about it.
Okay.
If it's useful, then I use it.
I see. Okay. So, well, that makes complete sense. Is there any other hint or tip for somebody who maybe is a first-time home buyer or a first-time investor?
One of the things that buyers can do, here's a good thing. There are down payment programs, so that can help people out in there's different types of down payment programs. And then also your communities have down payment programs as well.
Oh, really?
So it depends on different communities have different programs.
Oh, you mean like NC Housing, things like that?
NC Housing,
right.
Different programs. The old one I remember the most is a Nehemiah program.
Nehemiah, I've heard of that one too.
So, and then within certain communities, depending on what people do, who they work for, where there's all their money is available to help them as well.
How about with 401ks and IRAs?
401ks, IRAs are great for down payments.
Okay.
It's your money, you saved it, and you can use it towards buying a house.
Okay, so do people need to like take out a loan on those programs in order to get the money out?
So my understanding is they're a little bit differently. Some of them, they do loan the money. Some loan 401ks are set just for that. So they have different little rules, different little niche, if you will.
Okay.
About how the borrower uses it. But once you call them, they'll tell you what you need to do.
Okay, great. Well, thanks again, everybody, for tuning in to Carol Small, the Realtor's 6-minute real estate bites. And thanks again to Dwayne Johnson with Evolve
Bank and Trust.
Bank and Trust. Thank you, and have an awesome day. Take care.
Thank you for having me.